selling cash secured put options. But what strike price to sell at? That is what we will be discussing in this video, ladies and gentlemen. Because I believe in 2023, if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. At the 1 minute mark, a link's going to pop up right here to some free stuff. There's also paid stuff. At the 1 minute mark will be a link to a video that discusses what I believe the unfair advantages of this strategy are. Get ready. It's coming up right now. Boom! And my customer service is so spectacular that I'm going to take this playlist right there that you see doing the squiggly line, and I'm going to put it right up here at 1 minute and 30 seconds. I'll just, pop it up just like it did that other one. Just because it's going to go boop, it'll just pop up like that. Get ready for it. It's coming. Oh, 5, 4, 3, 2, and 1. Boom. There it is. Okay. So obviously we got free stuff. We got paid stuff. Get these downloads. But none of this stuff is financial advice. You could call it financial comedy. You could call it financial education. You could call it financial hogwash. You could call it financial whatever word or words you want to insert, but just don't insert this one because it's not financial advice. But you should practice with paper trading, right? You think Mike Tyson only fist fought people to learn how to fight? No, don't be a silly willy. You can even look on this wonderful platform of YouTube and look at Mike Tyson training, punching heavy bags, slipping back and forth under the rope, sparring with people. You could see him doing all this type of stuff that wasn't the real thing in order to get his skills ready to go into the ring and do the real thing. How about Floyd Mayweather? You think he only got in street fights? No, don't be silly. How about your firefighters? How about the police? How about the military? How about anybody? You think John Jones only gets in street fights? No. He trains once in a while. Then he gets drunk and gets street fights, whatever. So you can do that too. Not get drunk and get street fights. I guess you could do that too. But, paper trade. Do some training. Have some fun. And then let's get into it. What strike price do you sell at? Now, going back to 2017, I was already using AI. I know AI is the big buzz right now. But back in 2017, before AI was even invented, I was already using it. And I took ChatGPT back in 2007. And I ran the longest AI test humanly known. It actually lasted 5,000 years. And I did it all within 6 months. And I have the most scientific answer for the question that everyone wants to know. I know it's more important than the meaning of life. I know it's more important than what happens to us after we die. Way more important. I have the answer to what strike price to sell at. The most scientific answer of using AI before AI was even invented. Are you ready after that suspenseful build-up? The answer is, it depends. All right? I'm joking. I wasn't using AI back in 2017. I think I said 2017, 2007. Look, I'm BSing you. I was just joking. I was trying to build up the suspense. I hope it worked. It depends, man, girl, whatever pronoun. It depends. It depends. Just like accounting, right? What strike price to sell at? It depends. So now we know that it depends. We have that clear. I probably said that 14 times. I don't know, 7. I don't know, somewhere in there. So the first thing that I recommend that you look at is how much money do you have? And then you find stocks that are in your budget, right? One option contract is equal to 100 shares of stock. So if you're going to sell a cash secured put option, we just happen to have 12 different stocks here. And these are not stock recommendations. These are sector ETFs. which I just like to randomly use because I don't trade these at all. So hopefully it's like overly obvious that I'm not suggesting this. But look at some of the prices here. 176, 133, 34, 108, 83, 67, 64, 37, 67, 74, 150, 84. We could find stocks as low as $5, right? Even lower. There's stocks all with a bunch of different numbers. $3,000. How much money you got in your account? You got enough money to sell a cash secured put option on this? If not, what's Ford at? So all these different strike prices. And by the way, these are not recommendations. I don't trade Ford. I don't know much about Ford at the moment. I haven't paid attention to Ford in a long time. In the booking, I don't trade that either. I used to sell credit spreads on booking back in the day, but I haven't been doing that for a long time. So the point is like, look at, there's all these different prices. So number one, look at your account. How much money do you have in your account? And then with how much money you have in your account, when you're doing cash secured put options, that's really the first thing you got to look at. And then from there, that's going to dictate, because let's say if you have $5,000 in your account, well, you can't sell a cash secured put option on XLV or XLK. Or XLE for that matter. Heck, you can't even do it on XLY. Holy bejeebies. You might be able to do it on this one. You can definitely do it over here. You might be able to do it here. Why do I say might? Because look at this. Look at that. Drop down, right? Drop down. So number one, look at how much money you have in your account. Pick stocks that are somewhat trading in your range. In the range you have. Like, let's say if you have $5,000 in your account, do you want to sell one contract at a $50 strike price? Or are you more comfortable selling one contract at a $25 strike price? So if you get assigned, you still got 25 of cash, half tied up in stock. Also, once you start kind of figuring that part out, then what I would recommend in the very beginning is just focus on one stock in the beginning. One stock is going to make it easier for you to learn how to do this stuff and kind of get yourself dialed in. I think it was Phil Grande that I heard say, like, when you focus on 1 to 3 stocks, or let's just say one, it's like if you surf at the same place all the time. You know exactly how the waves break. When you go to different places, you have to learn that the way the waves break in that new place, right? You learn where the coral is. But when you already been surfing there for the last 6-9 months or whatever, I mean, from the first day to 1 month, you've learned a lot more, right? So focus on one stock. Pick a stock that's in your budget. How you want to do that? Think about if you want to, you're going to be okay. Are you going to be okay with if you get assigned and then you had a $5,000 account and you got assigned at $50 and all of a sudden you have zero money in your account and you just have 100 shares of stock? Are you okay with that? If you're not okay, then do it a little differently. Okay, so you figure that out. The next thing, before we kind of look at the charts to get an idea, some further ideas here, sell at strike prices that you're comfortable buying and owning for the rest of your life if you had to. One of the worst things that could happen is one of the worst things that could happen is that you buy a stock somewhere in here and it just, let's say you buy it at 50. We're talking about a $5,000 account. Perfect, right? So you sell when it was trading all over here and this was the rage, you sell a $50 strike price. You got a $5,000 account. Next thing you know, your $5,000 goes over to somebody and you got 100 shares of GameStop that's basically been trading since around 2001 basically in a range of 40 to 18, right? And that's not fun. So if you're sell at a strike price, that if you get assigned with the stock, you're going to be comfortable owning the stock potentially forever. And also this playlist that's at, I forget, 2-minute mark or something like that. This playlist and these downloads can help you learn some things to better pick out stocks to try to avoid GameStop type behavior. And so what we'll do, not to be a deep dive type of thing, but we'll just look at these different charts and see what we can learn. Like, okay, so let's pretend we're gonna forget about the $5,000 account. In whatever stock we're looking at, we're just gonna pretend that you have enough money. So like for this stock, we're pretending that you have $200,000 in your account, right? So it's no big deal to be selling options on any of these, right? You got $200,000, you're good. You can afford to buy whatever, $20,000 of stock, no problem. So now this over the last 6 months, it's really gone up quite a bit. And just by quickly looking at this, if by looking at this chart pattern, I might feel comfortable selling at the 160. If for some reason, especially since it's been on a tear and in the last X amount of years, technology stocks tend to be the rage, but it looks like it's bumping up against some resistance. Maybe if I didn't like the idea of getting assigned at 160, I was kind of worried about that. I see it kind of went sideways here, maybe 140, or actually probably anything below at 150 would probably be good, since it's a little bit below the 200-day moving average. Probably be okay. Looking over here at XLV, we see it's kind of doing this. Looks like it might be, see how it's like a low, higher, low, higher, low. Even though it's coming down a bit here, maybe it's doing this type of wedge thing. It's somewhat flat, so I wouldn't be surprised if it kind of went up to the upside just based on this little chart pattern right here. But looking here, just based on the charts, maybe the 132, 130, right? Maybe below here, 125. You see these little places where you see different type of resistance. And then if you really want to buy it at a good price, then you're probably going to be selling it down here more. Of course, the further away you go from where it's currently trading, then probably the lower the premium is going to be. And if let's say you want to buy it, you only want to buy it at 125. You're unwilling. You don't think it's a good deal at 130. You think 125 is the most you want to pay for it. You might have to go out in time more. So you look at your option chain. Say 125. What was it? XLV. $125. Hey, there's no premium here at 125. Well, then you might have to go out in time instead of 4-day contract. What about 11? 125. Oh, not a whole lot, right? Who knows? Might not be enough demand. Well, let's go out a little bit further. 18 days. 125. Okay, now we're starting to get a little bit. Well, how often do you want to be cycling these contracts? I think the Tastyworks people somehow figured out around like 21 days. At about 20 days, the Theta Decay really starts kicking in. When I first started learning about options in 2007, like 30 days was pretty normal to be selling at. A lot of Theta Decay kicks in. So take a look at 30 days. Hey, look at this. Look at that bid-ask spread. That's a conversation for a different topic, but somewhere between $4 to $60, right? And then, of course, you can go out even further. Look at this. It goes down to, way down, 2025 here. 655 days. I don't particularly care for selling leaps myself. I tried it a little bit. It just wasn't really my thing. $500, $600. It was a long time. Decay is not going to be kicking in very well for that. So that's one thing you could do. Look at down here, right? You got a lot of resistance right in here, or a support resistance area. Also right in here. So maybe you're comfortable at 105, right? I could see someone selling it at 105 just based on this chart pattern. But if you want to be even more well, I hate to say conservative, because you know, conservative and liberals, they're just like slandering each other nowadays, but I don't know what word to use. You could sell it at 100 or even a little bit lower, 95. Depends on how much premium you want to get, how much you got, all that. You know, same thing. See it here? That would be pretty good. Got right in there, 80. Looks like it came down to the 80 around here. We see prices clumping up there. This has just been on a tear up. So where might you sell here? I could see someone selling at the 65. If you're okay with buying at 65, I think there's probably good premium right there, and there's a chance it's probably gonna pull back a little bit. Maybe, what is this, 60? Maybe some people sell it at the 60, a little bit below 55, whatever. Over here, see the 80. Is that 85 right in there? Now this is a good one. Now let's say the 80, right? Because we see here, right? It started up here, drops down here, goes up here, drops down, stays in here for a while, right around the $80 range, and then goes back up here. So just by looking at this last 6 months, and if I was going to be doing this, I'm not making a decision just based on looking at one 6 month chart. To be honest with you, when I first start learning a stock, I will not necessarily look at all of these, but I'm probably going to be looking at, I'm definitely going to be looking at the 6 month daily, year daily, 5 year weekly, 15-year monthly, a bunch of different moving averages, and then the volume profile, all the volume profiles. But usually when I'm selling cash secured put options, then I'll start focusing in probably on a mixture of I'll get familiar with the weekly and the daily volume profile, be pretty familiar with these moving averages, and figure out like what the trend is, where some big support resistance might be on the monthly. And then I tend to look at the 6 month daily and the 5 year weekly quite a bit. And then I'll use this Kona probability also once I start figuring out what strike price, like what's the really try to get my strike price dialed in, of like especially if I just want it, if I'm trying to like get the best price possible, whatever. That doesn't really make a whole lot of sense. My point over here is that this is not enough for me personally to make a decision, right? I'm looking at a lot of other things, but just by looking at this, one thing when we're talking about what strike price to sell at, the $80 strike price, you're probably going to get assigned faster. The $75 strike price, just based on the last 6 months, you would have never gotten assigned, because the lowest it got was $75.36. So anytime it was over 80, if you sold at 80, or even now, there's a higher chance it will pull back to 80 than to 75. And you can, what is this? XLE. You can use the volume profile to get a better idea of that. So the volume profile shows you volume, but instead of like volume in this with time, it's volume with price. So we see in this time frame, 1 year daily, the bulk of the transactions have been around the 86.68. So you see right in here, that's where like the massive transactions are. So there's a fairly decent chance that it could, easily fall back down to what was that number we're looking at, like the 80. All right. What 80s down here. High probability it's going to pull back to about 86. And we wouldn't be shocked if it pulls back in here. So it seems to kind of trade in this like around, look at that, 80 and up to this 86. It's kind of the range, at least for this timeline. Now you see a different picture when you look at a different time frame. So looking at a longer term time frame, right? Boom, look at that, right? 80. Even pulling back down here to not quite to 75 though, right? Between 80 and 75. And look at all that price action that happened between 80 and 75. So where do you want to sell at? 80 or 75? How likely do you want to get assigned? You have a higher probability getting assigned at 80 than you do at 75. So it's up to you. You got to figure out what you want to do. There's a stock I'm trading right now that I've been trading for the last few months. And I'm doing a combination of the wheel strategy and just straight up selling shares. So I'm usually entering the position by selling cash secured put options. And then I have a number of shares that I will just sell covered calls on. And then I have some other shares that I'm basically just like swing trading the shares. But I'm entering on the covered call, cash secured put option. And it's similar. It has I don't want to say a similar pattern to this, but this part is similar, where for the particular stock that I'm trading, and one reason why I can get a decent amount of shares is it's not the most expensive stock. It's trading around like kind of this range between about 33 to about 37. Pretty common to be like 33 to 35, 36. And so, but at 32, for that stock, 32 is like this 75. Anytime I'm selling options at 32, I'm not getting assigned. I've only been assigned at 33. And then I get assigned at 33. It might be under, might be trading under 33 for a little bit, but it doesn't go below 32. It'll be 32 and some change, and then it starts rallying back up. And then sooner or later, and then usually I'll sell out somewhere, around that. And it's been working, really well for me. But there's other stocks that I'm not really doing the wheel strategy with. And so for me, depending on the stock and what I'm doing with it, like if this was that stock, I'd be selling at 80. But if this was a different stock that I wanted to maybe keep for the long term to collect dividends on, maybe I'll sell it at 75. There is another stock right now that I do want to build a position in, and it's trading. I think it closed around 57 something. I've been selling cash secured put options on this particular stock at 42.50, which is considerably below the where it's trading at. But I'm selling at around 50 days till expiration, and I've been getting around $45-50 per contract, and I'm okay with it because it's kind of like a bookmark for me. Like I make this $45-50, and one time I had it. I think it was dropped down low and volatility increased, and I got paid around 45 or 50 for like less than 30 days. But normally it's been around 40 to 50 days. I put on this trade. I don't care. I have the money to buy the shares. I want to buy the shares, and I want it at this price. And so it's like every 40 to 50 days, I'm making about $50, whether I own the stock or not. If I do end up buying the stock, I'm buying it at a price that I like, and I'm not going to be doing the wheel strategy with it. I'm just going to be collecting dividends with it and selling more, trying to accumulate more shares. So depending on what you're doing, how much money you have, where's your skill level, if you're first time doing it, like just stick with one stock, and maybe if it's your first time, you sell it to 75, right? Just so it can expire worthless, just so you can have this experience and then do it again. So you do you. Me personally, I think forget about the stuff of outsourcing your your own financial stuff to other people. To a certain degree, learn how to manage your own money, right? It's not really that hard. In the beginning, it's sort of weird because there's all these new names and all this jargon talk and stuff like this. And yeah, I'm definitely not saying it's easy. There's a lot of stuff going on. However, there's not so much stuff going on, and it's not so complicated that you can't figure it out. You can. And I'm pretty sure you can, because I'm not the smartest guy. And I've been able to figure it out through sheer perseverance. It has made me smarter along the way. That's the other thing. It's just like it's a snowball effect. You feel like, oh, this is too complex for me. Well, 6 months later, you're a smarter person. And so now you're able to handle more complex things. So it starts snowballing your intelligence. So what strike price to sell at? It depends. Depends how much money you have. It depends what it is you're doing. You want to do the wheel strategy. You want to do more of like accumulate dividends, or accumulate stocks for a longer term so you can collect dividends and sell cash secured put options. And sell covered calls against them. So just keep learning. And maybe the main thing is to be focused on learning how to make decisions for yourself. In my opinion, that's the best place to be. If you can learn how to make decisions for yourself, you can listen to other people to gather information, but ultimately you make the decision for yourself. It's the best place to be. I've been in both places, and my life has always been better. I've always felt better when I'm able to make the decision for myself, even though I might have to get myself to a position to be able to make a decision. I'm not 100% sure if that makes sense. It seems kind of confusing to me. I might have to learn how to gather information, what the information means, how to analyze the information. But at some point, my goal is to be able to make decisions for myself. And to be honest with you, I still outsource some stuff. I've been building a position in a monthly dividend ETF that basically is VIX related. I'm not making recommendations. I don't want to say too much about it because you probably could figure it out. But technically, I understand how they put this ETF together. I can do some similar things to that, and I might be able to get better return, just selling options myself. But that's okay. That's okay, because I like dividends. I like the idea of building a portfolio of dividend stocks that I can look at someday, or someday being tomorrow, or someday being 3 years down the road, whatever, that I can outsource certain bills to. So that's what you got to do sometimes. You got to keep learning. You got to learn how to make decisions. Learn how to think for yourself. Mike Mentzer said it the best. Learn how to be your own coach so you don't have to rely on the suspect opinions of other people. That's what I hope for you. That's what I'm attempting to do myself. Hope this gives you some insight into how to better determine the strike price. It's not a black and white answer. If you want black and white answers, then your good buddy Brent's not the right one for you. I'm the right one for people that want to be like me and learn how to make our decisions for ourselves. You guys have a fantastic day. Aloha.